If you run a grocery store, a restaurant, a salon, or a market store, I want to ask you one question before we get into anything else. Do you actually know how much profit your business made last month? Not revenue, not what came through the register, actual profit. What you kept after each cost was paid. If you hesitated even for a second, this video is for you, and so is this entire channel. My name is Fumi Oshifuson. I'm the founder of Margini Financial, simple spreadsheet tool designed specifically for small store owners who want to understand their numbers without needing a finance degree. This is the first video in a 14-week series I'm calling the Small Store Owner Complete Financial Playbook. Over the next 14 weeks, I'm going to take you through everything from knowing whether you're actually profitable to managing your cash flow, cutting hidden costs, pricing properly, hiring smart, paying yourself correctly, using AI and technology in your store. Yes, preparing to expand and eventually talking to banks and investors. By the end of the series, you would have more complete picture of your business finances than most store owners ever get. And every week, I will give you something specific to act on, not just theory. Each video builds on the last, so I encourage you to subscribe so you don't miss a week. I will link every video in the series in the description below as they go live. So here's the roadmap. Weeks 1 through 4 are your foundation, knowing your numbers. Week 5 through 7 would cover operation, that would be running your business better. Then weeks 8 through 11 would be about growth, paying yourself, expanding, technology, and AI. And while week 12 through 14 would be about scaling, second location, banks, and what financially healthy store actually looks like. Before we start at the beginning, and this is the beginning, in the next 15 minutes, I'm going to show you exactly how to know if your business is profitable, what numbers you actually need to track, and what to do if your margin is lower than it should be. So let's get into it. So most store owners I speak to fall into one of three camps. There are those who genuinely have no idea. Sales feel okay, there's money in the account most of the time, but if you ask them to tell you their profit margin right now, they couldn't. Then there are those who check occasionally, maybe at the end of the month when the bank statement comes in or when their CPA files the tax return. And then there's a small group who track it weekly, who know their numbers cold. And almost without exception, those are the ones who are growing. If you are in group 1 or 2, don't worry, you're not alone, and this is fixable. So here's the most important thing I want you to take away from this entire video. Revenue is not profit. Let me show you what I mean. Let's say you had a solid week. You had 4,800 come through the door. That feels good. That's a real number. But then look at what sits behind that number. The stock and the cost of good, 2,100, rents and utilities, 680, staff wages, 740, transport, 120, fees and miscellaneous, $95. Your actual profit from that week is 1,065, which is still money, but it's not 4,800. And if you have been mentally spending 4,800 worth of business, buying more stock, thinking about expanding, you're making decisions based on a number that isn't real. This is where most small business owners get into trouble. Not because they are bad at business, but because they are looking at revenue and thinking it's profit. So what numbers do you need to track? There are three. Number one is the gross profit. That's your revenue minus your cost of goods sold, meaning just your stock or ingredients. Your what you sold minus what you spent to make what you sold. This tells you whether you're making anything on each individual sales before you factor in your overhead. Number two is the net profit. That's your gross profit, the one we just talked about, minus every other cost, your rent, your wages, your transport, your fees, your utilities. This is what you actually take home. This is the real number. And number three, the most important one, is your profit margin percentage. That's your net profit, the last one we just talked about, divided by your revenue multiplied by 100. So in our example from the last slide, 1065 will be divided by 4800 multiplied by 100 would give us a 22.2% gross margin, which is actually a healthy margin. But here's the thing, most store owners don't know what that number is, and you can't improve what you don't measure. So why don't most store owners know their margin? I hear four reasons consistently. First, your POS system only shows you your revenue. It tells you you're solid. It doesn't tell you what you kept after your real cost. That's a fundamental gap. Then second, the hidden costs add up silently. Your transport, your spoilage, packaging, processing, payment processing fees. These don't show up in your daily sales summary. They quietly eat into your margin week after week. And third reason, you're busy. End of day is hectic. You've been on your feet for 10 hours or more. Sitting down to do the numbers feels impossible. And last but not the least, there is no simple system in place. You know spreadsheet exists, but they feel complicated. Hiring a CPA or big bookkeeper feels expensive for where you are right now. All of this are completely understandable, but the cost of not knowing is higher than you think. Here's a 5-minute profit health check you can do today, literally today after this video. Step one, last week total sales figure from your POS or your cash record, one number. Step two, write down every cost from that same week, your stock purchases, your rent for that week, your weekly rent, your wages for that week, transportation for that week, any fees and subscription attributed to that week. Then step three, subtract your total cost from your total sales. That number is your net profit. Then step four, divide that net profit by your total sales, then multiply it by 100 like we talked about. That gives you your profit margin percentage. Step five, look at the number honestly. If it's below 15%, something is eating your profit and you need to find it. Now, if this still feels like so many steps, I've built a free calculator at margini.com that does all of this in 60 seconds. No sign up, just your numbers in, and it tells you your real margin instantly. The link is in the description. What actually is a good profit margin? The honest answer is it depends on your type of business. For grocery stores, typical net margin runs between 3 to 8%. That sounds low, and it is, but grocery is a volume game. The margins are thin, which is exactly why you need to know yours precisely. For restaurants, it's somewhere between 5 to 15%. That's typical. Food cost control is the biggest lever. The difference between 5% and 15% is often just how well you manage waste and portion size. For salon and beauty businesses, margins tends to be stronger, 15 to 25%. Labor is your biggest cost, so your pricing and scheduling directly drive your profitability. Stores and farmers market, because your overhead is lower, margins can be excellent. 20 to 25, 35% is achievable, but many vendors are still underpricing because they haven't done the math properly. This is an industry average. Your actual number will depend on your location, your pricing, and your volume. So if your margin is lower than you like, here are 4 levers you can pull. The first one is raise your prices strategically. I know that feels scary, but most store owners are underpricing because they never calculated their true cost. Even a 5% on your best selling item can add hundreds of dollars a month to your bottom line. Then number two, cut invisible costs. Go through every invoice, every auto pay, every supplier relationship, delivery fees, payment processing rates, subscriptions you've forgotten about. These add up to real money. Then step three, push your highest margin products. Do you know which item in your store make you the most money per sale? If you don't, you should. Promote those, not the one with the highest price tag, but the one with the best margin. Then step four, track weekly, not monthly. Catching a bad week while it's happening lets you fix it. Waiting until the end of the month just confirm damage that's already been done. So here is where we meet Margini. Margini is a set of financial spreadsheet tools built specifically for people running grocery stores, for restaurants, salons, and market stores. It's not built for accountants. It's not built for people with finance degree. It's for small owners, small store owners who need clear, simple answers. And there are three products. The starter pack is $14.99. It gives you your daily sales log, an expense tracker, a profit dashboard, and a pricing calculator, all in one spreadsheet. Then we have the growth pack for $29.99. This adds a 13-week cash flow projection and a scenario planner. And the bundle at $47.99 is the full system with inventory tracking, POS, input support, and plain English insight. All three are available on Etsy right now. Link in the description. As we mentioned, revenue is not profit. Your POS is not telling you the full story. And there are three numbers every store owner needs to know: your gross profit, your net profit, and your profit margin percentage. Do the 5 minutes health check I walked you through. If your margin is lower than it should be, you now know the four levers to pull. Head to marginifinancial.com and try the free profit calculator. 60 seconds, no sign up. If this video was useful, please like and subscribe. This is week 1 of 14 series, and every video will build on the last. Next week, we'll be covering something that catches a lot of store owner off guard. Why your cash flow and your profit can look completely different, and what you do when you're profitable on paper but broke in practice. I will see you in the next one. And if you know another store owner who needs this, share the video with them. The whole series is free. Bye for now.